Hey everybody, Chad Shoop here with our latest Bank It or Tank It segment. Today's going to be quick takes. I got 5 stocks that we're going to run through pretty quick. We have the Trade Desk, GameStop, BJ's, Disney, and Tyson Foods that we're going to be talking about today. Very quick, to the point, in the chart, so let's get right to it. Alright, now before I pull up the charts, I just want to say that, look, a lot of things have been going on, a lot of changes in the industry. I'm up to something big. I've been working on a side project here that I'm excited to announce in the coming weeks, but not many details today, but over the next couple of weeks, I'm going to be slowly letting out some of the details on this big event that's going to be coming up here just in another month or so. So stay tuned. Right below this video, in the description, I'm going to have a link. It's going to say subscribe page, Chad Shoop. That's where you're going to click to be able to stay informed. You can drop an email in there, and I'll be able to keep you in the loop on my next big event that's here coming up in just a couple of weeks. So be sure to check that out. Be sure to like and subscribe to the channel so that way you can keep up with me, and make sure you're following me on Twitter at Chad Shoop Guru. There'll be a link below as well to make sure you follow me on there. So let's dive into the charts today. We're going to start with none other than a meme stock, GameStop. So let's pull up this chart here. We have going back to the big push that they had back in January of 2021. You can see that's when they went astronomically high, but it hasn't quite fallen all the way back to earth yet. We can look at this yellow-orange resistance line. It's kind of touching across these peaks, and I wanted to highlight it because it just had a big move higher. This was an exciting day. Meme stocks were kind of running to the moon again, it seemed like, and then all of a sudden things pull back, and now we're back into this wedge pattern, rising wedge pattern, that the stock is just kind of bouncing around in. So today, looking at this chart, knowing that it hasn't broke out yet, it's just kind of bouncing around, I'm going to keep it on my Tank It list for today. We're going to keep this as a Tank It stock because right now it's at the top end of this channel. It can trend lower and just stay in this kind of consolidation without really giving us a big move to the upside. Now, if we can get a breakout out of this price channel, then we'll turn more bullish. So we want to watch it closely over the next couple of days. Follow me on Twitter. I'll be sure to update any of these signs that we see once they break out, once they break down to the downside. So another stock we were going to look at is Tyson Foods. This is one that when it was going to the downside the other day, and that was a big drop on earnings that they had, and you can see that this is a pretty sharp move down to this channel on the low end of this. We can tighten that up a little bit, but you can see here out of this falling wedge pattern, Tyson Foods is at the bottom of this. So shockingly, while this stock is trending lower right now, I'm actually going to add it to my Bank It list today because I'm aggressive. I see that it's heading over here in the lagging quadrant. That's because it's red on these candlestick charts. That means that we're looking for this to bottom soon. It doesn't have to bottom today. I'm not looking for a V recovery so far. I'm just saying that since as long as we can ride this support level and bounce around here, there's not too much more risk to the downside unless it breaks below this, and it can continue to run back up to about $85 a share here in no time and still just be bouncing around this channel. So we're going to throw it on our Bank It list, keep a close eye on it. If it falls below that support, we definitely want out. So the other stock I was going to look at today is BJ's. This is the wholesale company, and wholesale stocks have been doing really well. But look, this one across the top here, it's not breaking out. I mean, wholesale stocks like Costco, they've been doing good in this environment because people are looking to save money. You know, you want to buy in bulk so that way you can save money in this inflationary times. But this stock has not done anything. That's going back to November 2021, touched this point in April 2022. Now we're back up here again, and it's August of 2022. So testing this area as a key resistance. We could break above this. This is going to be my key line in the sand to watch. It's in the lagging quadrant, which is a typical sign of weakness. But what do I look for after we're coming out of the lagging quadrant? Is the stock to move higher. So you know what? It's up here at the top. I'm going to make a call that we're going to look for this to break out. On the downside, I don't want to see this stock fall below $68 a share. That'll kind of a signal that the trend is kind of shifting, starting to head back to the downside, and we don't want to get caught up in that. So I'm going to have it as a Bank It stock, but keep a tight stop on it around $68 a share. We're trying to play the breakout here. Next up is going to be Disney, the magical place to go. My kids love to go there, but we haven't been there in a couple of years now because of, well, COVID, and they've totally messed up their prices and their fast pass lanes. So we've been kind of spending some time at Universal, kids getting older, that sort of thing. Look, the stock has been hammered. Now it's riding this resistance level to the downside, and it's trading up there near the top of it. It's showing weakening on this, and it is right on this line. Then it had a big move higher overnight on earnings, so that can be signaled as a breakout here, getting out of this resistance area. I'm gonna throw it on my Bank It list. We can call it the Deadpool bounce. Who cares? They added these R-rated movies, more subscribers to Disney Plus. They're going to figure out their parks things to get people back in there. By the way, they're at capacity pretty much every day, so they don't have to worry about it right now. They're still making a boatload of money, and that's showing up in their revenues. After the big drop, we're breaking out of this resistance level, so let's jump in, add it as a bank stock, but we do not want this to pull back below 110. So that's going to be the key level to watch going forward. $110 on a pullback. We're going to look to ride this momentum from the big earnings pop today and see if that will carry us higher over the next couple of weeks. Now, our last stock is the Trade Desk, TTD. Now, this is a popular company here for advertisements. That's what they're known for. So this has been a big part of the slowdown with Facebook not being able to sell as many ads. The Trade Desk is showing that that could be turning around. You can see, though, that we had the breakout from this resistance area. This was back in July. They broke out of that steep resistance level, then it tested it, and then it started to push higher. So that was great. But guess what happened here just yesterday? The stock shot up like 30-some%, up to $75 a share. So that was a big jump, and I think we missed the breakout. I think it could push a little higher here, up to 80, maybe 84, 85. But I think ultimately it's going to peak over the next couple of weeks and head lower from there. So we're going to throw this on our tank it list because right now the risk is to the downside. Now on the upside, I'll call 82.50 as my kind of resistance level to the top, and this is just based on the big move that we had. I can give it some volatility from here, but I don't see it settling down and staying at these high levels. I see it closing the gap and quickly racing back down to these mid 50s over the next couple of weeks. So I'm going to throw this one on my tank it list, and a big part of that, and this is why I kind of wanted to have the Trade Desk as the last one, is because look, these stocks are all over the place. They've already been through a crash, and I know a lot of people are trying to call the bottom already in the market. This May, June, July lows in the market, that was the ultimate bottom, and that from here it's to the races. Meme stocks are coming back, tech stocks are coming back. It's off to the races and everybody's jumping in. But the big caution that I'm seeing right now in the markets, not just from a big drop, just seeing this bear market rally take place, and that's what I think it is, a bear market rally that'll ultimately give way to more selling pressure. The biggest reason I believe that is because the Federal Reserve is still out there, and they're still kind of adamant on increasing interest rates. We have another Fed meeting in September, so that's not for another month or so. So we can kind of see this market trend sideways a little bit from now till then. I believe I don't think we're going to get a big run until then. But I think that that's going to be the big event that's hanging over everybody's heads here over the next couple of weeks. They just want to know how the Fed's thinking. So as the meetings come out, as Fed members start to speak and just kind of give their take on the economy, if they start to show that they're still giving the green light to hiking interest rates and making another big, even if it's a half point or a 75 percentage point jump here in September, I mean, that's massive. That's a big blow to the economy, and that's going to cause the market to sell off and eventually roll over. So that's what I'm watching right now. The Fed can dial it back a little bit. I think that'll give the market some room to run higher from here. So that's all for today. Again, scroll below, check out the description, make sure you subscribe to the channel, like the page, follow me on Twitter, and click the link so that way you can stay up to date with my next big move. I'll be back next week with another video that's going to talk more about the unusual options activity in the market. I wanted to break these videos up into separate segments. So next week, we're going to be talking about some unusual options activity, how to trade it, and how to spot it. And that'll be all about next week as we continue to get closer to this big event for me. So that's all for today. Until next time, I'm Chad Shoup.